Welcome to this explainer. Okay, picture this. You're sitting on your couch, staring at your phone, watching some random new project absolutely skyrocket, like 500% in just a few hours. The FOMO hits you hard, right? So you throw your money in, and then, boom, almost immediately the price plummets. Sound familiar? Look, today we're completely tearing down the illusion that succeeding in the cryptocurrency market is all about getting lucky. The truth, and this comes straight from the data and the expert trader advice we're diving into today, is that long-term success requires a massive mindset shift. We're talking about ditching that rookie gambling mentality and stepping into the structured, disciplined world of a pro. Because if you want to actually survive and thrive in this space, you need to know exactly how the experts operate.
Okay, let's dive into this. Here is our roadmap for today. We're going to navigate the hype trap, look at how to protect your trading capital, master crypto market psychology, build a rock-solid security foundation, and finally, we'll open up the expert trader playbook. Let's get to it. Consider this reality check for a second. Every single year, millions of people flood into crypto, and they are all hoping to strike it rich instantly. But the data shows us that most beginners actually lose money. And here's the kicker. It's not because crypto itself is a scam or because success is impossible. It's simply because beginners fall for the psychological allure of a 24/7 casino. They make the exact same dangerous, repetitive mistakes over and over again. Consider this explainer your ultimate antidote to those mistakes. Section 1. The Hype Trap. Navigating the Noise.
So, have you ever felt that intense, burning urge to buy a coin literally just because everyone on your timeline was hyping it up? Yeah, that's the quick profit illusion in action. It's that dangerous mindset where you enter the market thinking you're gonna, buy a private island by next Tuesday. That's just gambling behavior, plain and simple, and it leads to highly emotional, risky decisions. Expert trader advice tells us to do the exact opposite. You got to focus entirely on patience, strategy, and long-term thinking.
And that gambling mindset, it almost always leads to buying based purely on social hype. Beginners will actually take financial advice from some random influencers shouting out of a rented sports car, or they'll buy just because a price is already pumping. But look, by the time the hype reaches mainstream social media, you are usually buying right at the top. You are basically becoming exit liquidity for the pros. Professional traders completely tune out this noise. Instead of scrolling Twitter trends, they're looking at GitHub commits, on-chain data, and really diving deep into tokenomics.
So, the crucial point is this. Before you put a single dollar into a project, you need a strict checklist. Experts meticulously research a coin's utility. Like, does this thing actually solve a real-world problem, or is it just a cute dog logo? They look at the market cap, because they know a coin costing 1 penny doesn't mean it's cheap if there are trillions of them in circulation. They investigate the team of developers, the actual use case, the organic strength of the community, and of course, the fundamental security of the network. Bottom line, never blindly follow the hype. Which brings us to Section 2, protecting your trading capital. Survival first. Because here's the thing. Once you figure out what to buy, your next biggest challenge is knowing how to actually keep your money safe from the market and honestly, safe from yourself. And that brings us to leverage. Leverage basically lets you borrow funds to amplify your trading position. Think of it like driving a car at 200 miles per hour. Sure, you might get to your destination faster, but one tiny bump in the road and you total the car instantly. It's a double-edged sword. It can create massive profits, but it can also cause catastrophic losses that wipe out your entire account in a single red candle. And there's a really stark contrast in how these tools are used. Many new traders get completely wiped out because they treat the market like a lottery ticket. They'll overtrade with 50 or even 100 times leverage, totally ignoring the math behind the risk.
But true expert trader advice prioritizes capital preservation over theoretical gains. Professional traders survive because they stick to very low leverage, or honestly, they completely avoid it altogether when they are building out their core portfolios. This brings us to the absolute foundation of market survival: risk management. Look, if you don't have risk management, you aren't trading. You are guessing. Expert trader advice almost universally relies on the 1% rule. This simply means you never risk more than 1 or 2% of your total portfolio on any single trade. It's a safety net. It guarantees that even if you hit a string of bad trades, you won't get knocked out of the market entirely. Protecting your capital is way more important than chasing profits. I really want that to sink in. Every single market rule out there is written in the blood of blown accounts. If you run out of capital, you are entirely out of the game, period. Professional traders focus on not losing money first and making money second. All right, Section 3, Mastering Crypto Market Psychology, Mind over Market. As we all know, crypto markets operate 24/7, and the volatility is insane. Because of that, beginners are usually operating in this constant storm of fear and greed. They fall victim to panic selling when the market dips, revenge trading to try and win back a loss, or stubbornly holding on to losing trades just out of pure emotional attachment. Successful expert traders, they operate like monks. They rely on strict, pre-written trading plans and calm discipline. They never let their current mood dictate when they buy or sell. And a huge part of maintaining that calm discipline is understanding market cycles. The market doesn't just go up forever in a straight line, right? It has massive upswings called bull markets and harsh down periods called bear markets. But crucially, it also has accumulation phases. These are those really boring sideways movements where prices do almost nothing for months. Beginners usually lose interest and walk away during these times, but expert trader advice dictates that accumulation phases are exact when professionals are quietly building their wealth for the next cycle. And this brilliantly illustrates our next point. Controlling emotions is a superpower. In a space driven by wild, intense volatility, mastering your own psychology and keeping your emotions in check is quite literally your ultimate defense mechanism. Moving on to Section 4, Security and Trusted Platforms, Your Financial Foundation. Because honestly, all the trading strategy and emotional discipline in the world will not matter one bit if your funds just get stolen. Billions of dollars are lost in crypto every single year, and it's not always from bad trades, it's from bad security. So here are your absolute non-negotiable musts. You have to enable two-factor authentication on every account. You must never, ever share your recovery phrases with anyone, not even customer support, and you have got to avoid suspicious links and those feat giveaways you see plastered all over social media. A major component of that security is where you are actually executing your trades. Experts only operate on battle-tested infrastructure, globally trusted platforms used by millions. We're talking Binance, Coinbase, Kraken, Bybit, and OKX. They are standard for a reason. Expert trader advice tells us to look for tight security, high liquidity, and proven proof of reserves. Listen to me on this one. If a platform you have never heard of promises you a guaranteed 100% daily return, run the other way, fast. And finally, Section 5, the Expert Trader Playbook, from Rookie to Pro. Now it's time to synthesize everything into a highly actionable strategy. The final major contrast between beginners and pros is how they treat knowledge. Way too many people take blind risks before they even grasp the basics of risk management. But the expert view, education is the absolute best investment you can possibly make. Experts treat trading like an actual profession. They study macroeconomics, technical analysis, and tokenomics well before putting their chips on the table. Let's see how this all builds into the ultimate expert trader playbook, synthesized into 5 simple steps. Step 1, invest slowly. This means dollar cost averaging into positions instead of just going all in at once. Step 2, diversify carefully so you spread your risk across different sectors. Step 3, always use a stop loss to automatically cut your trade and protect against massive drops. Step 4, think long term. Zoom out on the charts rather than chasing a daily pump. And step 5, focus on consistent, daily learning to really sharpen your edge.
Crypto absolutely can create life-changing opportunities, but really only for those who stay disciplined. Consistency beats excitement every single time. Your goal is not becoming rich overnight. Your goal is building your skills, establishing that consistency over months and years, and remembering that your survival in the market always comes before profits.
So, I want to leave you with a question to really challenge your own approach. Based on everything we just covered today, what do you think is the absolute biggest mistake beginners make in crypto? Think about it. Apply the expert trader advice we laid out today, audit your own psychology, protect your capital relentlessly, and I will see you in the next explainer.